Imagine you are planning a significant home renovation. You have exciting ideas about expanding your kitchen, adding a sunroom, and upgrading your bathrooms. These exciting ideas, the decisions about what to renovate and where to spend your money within your home, are similar to what we call investment decisions in the business world. Investment decisions are all about where a company chooses to put its resources. Think of it as a company deciding what projects to undertake, what assets to acquire, or what markets to enter. For a restaurant, an investment decision might be whether to purchase a new larger oven to handle increased customer demand or to open a second location across town. For a tech company, it could be deciding to invest in research and development for a new software product or to acquire a smaller, innovative startup. These are all choices about deploying capital, the company's financial resources, into things that are expected to generate future returns, like increased sales, greater efficiency, or a stronger market position. Essentially, investment decisions are about allocating resources to assets that will benefit the company over time. Now, consider how you would pay for your home renovation. Would you use your savings? Would you take out a home equity loan? Perhaps you'd consider refinancing your mortgage. These choices about how you will fund your renovation are analogous to financing decisions in the business world. Financing decisions are all about how a company raises the money needed to fund its operations and its investments. Just like you have different options to finance your home renovation, businesses have various ways to secure funds. They might borrow money from a bank through a loan, similar to your home equity loan. They could issue bonds, which are like borrowing from many investors instead of just one bank. Or they might issue stock, which means selling a piece of ownership in the company to investors in exchange for capital. Financing decisions involve determining the optimal mix of debt and equity, considering factors like interest rates, investor expectations, and the company's overall financial health. The goal is to secure the necessary funds at the lowest possible cost and in a way that aligns with the company's long-term financial strategy. So, to put it simply, investment decisions are about deciding what to do with the money a company has or will have, focusing on acquiring assets and projects that will generate future value. Financing decisions, on the other hand, are about deciding how to get the money needed to fund those investments and operations. They are two sides of the same coin, inextricably linked but distinct in their focus. A company needs to make wise investment decisions to grow and be profitable, but it also needs to make sound financing decisions to ensure it has the resources available when needed and that it manages its financial obligations responsibly. Both types of decisions are critical for a company's long-term success and sustainability. Thinking about your home renovation, you can see how you need both good ideas for renovations, the investment decisions, and a solid plan to pay for them, the financing decisions, to achieve your desired outcome.